Hello everyone, this is Dari here. Hope you're well. The topic we will cover today is the MACD, Moving Average Convergence Divergence. I thought I should cover this topic based on some of the comments and requests we had this week. It is also very interesting to note that this strategy we are about to discuss was used in a trading competition, one of the forex trading competition, by someone who identified themselves as effortless abundance. So I'll give credit to them for creating this strategy. So on the screen is the topic we will cover. We discuss MACD. We will discuss the two MACD settings we are using. We will look at the different type of entry signals, the trend, re-entry, counter trend, bullish divergence, bearish divergence, and then we go through the list of rules that have been made available in a table. And finally, we will do a practice. We'll go into a live chart and then we pull up a live chart to see how we can make use of these strategies to trade. So what is MACD? MACD is a trend following momentum indicator that shows the relationship between two moving averages of price. So the usual MACD has a setting of 12, 26, 9, which is fast EMA 12, slow EMA 26, and the MACD SMA 9. This is the histogram. It's actually the difference between the fast and the slow EMA, and this is the zero line. This line here is the MACD SMA line, which we have signified here as 9. Okay, but we are not going to use these standard settings. We are using our own custom settings. Okay, so this is the first MACD settings that we will use. We call this one the big MACD. So we call it big MACD, and we make use of a white color for it. So the setting is 12, 26, 1. So you see it has histogram as we have discussed. The zero line above zero line is an uptrend, which is the positive zone. Below zero line it is downtrend, which is the negative zone. Notice that the SMA here is just along the histogram. Reason is because our settings for that SMA is 1. This is the second MACD we will use. We call it the small MACD. We use yellow color for it, and the settings is 5, 15, and 1. The same thing that apply to the big MACD also apply to this as well. The difference is that this MACD has a smaller settings, and it react to price movement very faster because of the settings. Okay, by using these two MACDs together, we will achieve three things. We will be able to have a confirmation of our trade. We will be able to re-enter a trend, so like re-entry strategy, and then we can do a counter trend strategy if we apply these two MA together. Okay, so this is how the two MACD will look like on your chart. So you have the big MACD with 12, 26, 1, and the small MACD with 5, 15, 1. They both have their own zero line. This is zero line for the small yellow MACD, and the zero line for the big white MACD. The first entry signal is called the trend entry signal. So what is trend entry signal? It is the crossover from negative zone to positive zone across the zero line. So when MACD crosses the zero line upward, it's a buy signal. When MACD crosses the zero line downward, it's a sell signal. However, we only need the small MACD, the yellow one, to cross, and we need the white big one to point in the same direction as the small MACD. So here you have a buy signal because the small one has crossed and then the white one is pointing same direction. Similarly here, the yellow MACD has crossed downwards and the white MACD is pointing same direction, a sell signal from here. Similarly, a sell signal from here. Yellow has crossed down, the big MACD is also pointing same direction. And finally, we have a buy here because yellow has crossed above zero line and the white is pointing same direction. Note that we have few other signals that we didn't show up here because of space on this screen. There's a signal here, there's another signal here. So this is the trend entry signal. It is one of the reliable entry signal we will discuss today. The next one is the re-entry signal. As the name suggests, it is when a trend is already going on and you want to enter the trend. So this is a buy position from the former trend entry. So the trend is ongoing and then you want to enter. So what you need to look for, you need to look for the smaller MACD to dip below the zero line and then come back up. So go against the trend and then come back up to follow the trend. But while the small MACD is doing that, the big MACD still continue with the trend. The big MACD never dip below zero line. It's always above zero line. Only small MACD dip and then come back. So this is the re-entry signal. At this point, you will enter a buy position. You can see it's a good buy position. Our profit target for this type of entry is between 20 and 40 pips. Also for the trend entry is between 20 and 40 pips, but I'll suggest use 40 pips because you will be able to get 40 pips easily on this strategy. We are employing 1 hour charts or 4-hour charts. So counter trend signal. Out of all the signal we will discuss today, counter trend is the weakest. In fact, I have taken this slide out of this presentation but decided to add it back for information purposes only. Reason is you are trading against the trend. So here the trend is up, but a signal, counter trend signal, is generated when the small MACD crosses below the big MACD. So sell signal. Whereas we are uptrend, but it gave us a sell signal. The same thing here, we are downtrend. The yellow MACD has crossed above the white MACD. We got a buy signal. Another sell signal here, we are uptrend. The yellow crosses below the white MACD, giving us a sell. You could see that even here we could have made a good pips because it's a good signal, but if you consider it over a period of time and there are so many false signals, then it will not be profitable on a long run. Recommended take profit target for this strategy is 10 pips. Remember, the first two strategies or the signals is 40 pips. For this is 10 pips if you will actually trade it at all. Now we have bearish divergence signal. What is divergence? So you need to understand what divergence is. It occurs when the price of a financial instrument and the value of an indicator move in opposite direction. So if we join these two highs together, this is the previous high and the current high with a trend line. It shows price is going up actually. However, if you join the same 2 points together on the indicator, price is going down. This is called bearish divergence. So indicator is telling us that this is going to fall very soon. Price will fall very soon. So we stand by to take a short position. But before then, we make sure that the smaller MACD has crossed down, and then we wait for two more candles. Just give ourselves some breathing space to make sure that the divergence actually is real before we short this trade. So we short the trade here following the divergence. Then bullish divergence is just the opposite of this. Price indicates that this USD Japanese is falling. Meanwhile, the indicator says the opposite. So that means we are ready for a buy. Because the indicator rules, we are ready for a buy. So we wait for two more candles after confirming the divergence. We see that the small MACD is already above the big MACD. We just wait for two more candles, and from here we go long. Okay, now I know there's so many rules that we have talked about, so to make life easy for everybody, here is the table for the rules. So the rules these are all the sell trade rules. Take profit for all of them is 20 to 40 pips. I would say 40 pips, except the counter trend strategy, the counter trend signal, which I only recommend 10 pips. And the same thing applies to the long trade rules. Okay, so now we are going to go and look at the live chart and see how we can apply these trading rules. Okay, so this is a USD Japanese yen 1 hour. As I said before, we will use either 1 hour or 4 hours, and that is what is being used successfully on this strategy. So now let me show you how we can make this MACD. Okay, so it's already here, so I will delete it and we create a new one. So you drag the MACD onto your chart, and then you give the parameter. The first one is the big MACD, so we make it 12, 26 and 1. Color could be anything, we just make it white color, and then the level we set level 0, and then white color. We make the line a little bit bold so we can see it properly. So this is our first MACD. This is the big MACD with 12, 26, 1 settings. Now we want to add a second MACD, but wait, you will not just drop it on the chart. You will not also just say attach to chart. No, you will drag it on top of this current MACD that we have here already, and then you put its own parameter, which is 5, 15, 1, and the color, we say we want yellow to be the color for the smaller MACD, and then we have 0 level as well, and we make it a bit thick. That's it. So now we have our two MACD together. So let's see how we can apply this to trade. So we can start anywhere on this chart. So let me put a line here. So let's start from here. So we see that MACD has crossed above here, so that's a trend signal here. So it crossed above, and we see that the smaller MACD has crossed above zero line, and the big MACD is pointing upward. That's a buy trade. So we put a stop loss just below here, below this swing low, and we are looking for 40 pips from our buy position. Do we have 40 pips? Yes, we have 40 pips. We have actually more than 40 pips, 154 pips. So we move on to the next trade. We look for the next trade. The next trade actually is a sell trade over here, because the small MACD crosses below zero line, and the white MACD or the big MACD is pointing downwards. So this is sell position. Then we put our stop loss just above the swing high over there, and then we want to look for 40 pips from the entry position. So 40 pips, do we have 40 pips? Yes, we have 40 pips. We have way more than 40 pips, 147 pips. So we move to the next trade. We look for the next trade. Okay, so this is the next trade, but look, when the smaller MACD crosses above the zero line, the big MACD remain under zero line. That is what we call re-entry signal. The big MACD still remain bearish, that is downtrend, but the smaller MACD pop up above zero and pop back down. So it gives us opportunity to short the market immediately it pop back down. So here is the signal to sell. So we're going short here. In fact, our stop loss is better now, because it will be here rather than up there. It's now here, and we will look for our 40 pips. Do we have 40 pips? Oh yes, we have more than 40 pips. We have 120 something pips. So guys, this is how this system work. All the trades we have taken so far seems to be positive. I am not saying this is 100% win strategy, but if you play it properly, there is a high win percentage. And let's look at some divergence trade. Okay, this is a bullish divergence. You see here, these are the two low points, the previous low and the current low point. And let's do the same thing on the indicator. So when we find the low here, we can see that indicators is telling us price is going up, but in real actual price went down. So this is bullish divergent. So we will, from here, we'll be looking to take a buy trade. So you wait for just two candles more, then you put a buy trade here. Okay, now let's look at bearish divergent. So here prices is going up. Let's see what the indicator says. So if you go down here, indicator says price going down. So we are going to short the market, but we need to wait for two more candles. So that's the end of divergence. Wait for this candle and that candle, so we go short from here. So we'll go short from here. Like this trade, for example, I might not encourage you to take it, because the stop loss is too high compared to the 40 pips you want to make, so you might not take it. But in case you take it, then you are going to have your 40 pips. This is 50 pips here, so you're going to have your 40 pips. So guys, we have gone through 4-5 trades currently, and they all seems to be positive, but there will be times when this will not work. So that is why you need to put your stop loss at the right places. Consistently you can make 40 pips. So if you have one trade in a day, you have to have different pairs opened. So you are not trading just USD Japanese yen, you are trading all the majors. So let's say you have 10 pairs open. At least one of those pairs will give you a trade in a day. And if you make 40 pips in a day with this strategy, I think you will be all right. So guys, this is what I have for you today. I hope I've been able to show you that with this, with the combination of these two MACD strategy, these two MACD indicator, you have better chances of accurately entering position, putting your stop loss and your profit target. And also we are able to show you that using one single MACD has a bit of disadvantage. So guys, thank you so much for watching this video. uh, this indicator MACD and the template, you can create it yourself. However, if you want me to send it to you, I'll be more than happy to do that. Just make a comment on the video and then put your email address. I will send the template to you. So once more, if possible, can you share this video on your social network pages if you can, so that we can help other people, other traders out there that need our help. Okay guys, thank you so much for watching. Do not forget to subscribe please, so that it will encourage us to put more content like this on our platform. So thank you again, thank you for watching, and I will speak to you soon. It's Dari.